On November 13th, the Ministry of Finance, the State Taxation Administration, and the Ministry of Housing and Urban-Rural Development announced new tax cuts for real estate transactions. These measures include not only the previously reported deed tax reductions, but also value-added tax exemptions. While this should theoretically benefit the real estate market, the A-share market reacted negatively on the day of the announcement. The Shanghai Composite Index dropped 1.7%, the Shenzhen Component Index fell 2.8%, and the Xi Next Index plunged 3.4%. Even the real estate sector failed to gain any momentum from the news. China's capital markets are deeply pessimistic at the moment, unless the Chinese Communist Party introduced a dramatic and extraordinary policy similar to the central bank's significant move at the end of September. Standard stimulus measures seem to have little impact on market sentiment. On the same day, renowned state advisor Liu Shijin, known for previously advocating a 10 trillion yuan stimulus package, made a comment that caught my attention. He stated, "Short-term stimulus policies are essential to stabilize the market and buy time and space for structural reforms." To me, this suggests that China needs to inject liquidity and issue bonds to prop up the economy with the underlying hope that by enduring long enough, they can wait until Xi is gone and the reforms can finally take place. It feels like this has become a common understanding. When someone talks about buying time for structural reforms, it's essentially an admission that the reforms can't happen right now. And why not? Who is the biggest obstacle? Isn't it Xi himself? In that sense, such remarks are daring, even borderline subversive. But this approach carries major risks. What if the Chinese economy collapses before Xi is gone? And even if they outlast him, what if his successor ends up being just another version of Xi? You could also take a more optimistic view and suggest that perhaps one day Xi might have a change of heart and choose to embrace reforms. It's not entirely out of the question. Maybe everyone is simply waiting for him to take that step. Whether you are pessimistic or optimistic, one thing is clear. If reforms are to happen, there will undoubtedly be signs before they arrive. Hi, I'm Dongxiang and welcome to Dig Into China, where we dive deep into China to uncover insights you won't find anywhere else. In this episode, I'll explore which signs we should be paying attention to. The first sign would be a shift in Sino-U.S. relations, which I think is the change Xi is mostly likely to make. Although I've often called Xi an elementary school PhD and the king of reversing course, and while China was particularly aggressive and a wolf warrior in ancient years, causing a lot of international discomfort, it's clear that China today is nowhere near as combative as it was back in 2017 or 2018. You should say that ever since the real estate crisis and the economic decline, Xi has become much less assertive on the international stage. The reason is simple. China's financial strength is no longer what it was, and it can't project the same power. A few years ago, Xi felt confident taking a wolf warrior stance because China's economy was doing well, and with money to spare, the country felt bold, like it could act as the global big boss. But in the past couple of years, as the economy worsened and foreign capital fled, this became clear that China's resources are dwindling. So, in a way, Xi has started to tone things down. For instance, China has begun offering unilateral visa exemptions to many countries. Citizens from the US, Australia, and Europe can now visit China without needing a visa. And in early November, even South Korea was granted this privilege. This is an unequal arrangement, as Chinese citizens still need visas to visit these countries. Diplomatically, it makes China seem subordinate, almost as though it's going out of its way to please others. What's even more striking is that this gesture is being extended to countries like the US and Australia, which have had some of the most intense confrontations with China in recent years. When faced with the reality, China's wolf warrior diplomacy has crumbled, with the country essentially removing its own fangs. Beyond the relaxing visa policies, the State Council introduced 24 measures this year to attract foreign investment. The manufacturing sector has been fully opened to foreign capital, and even industries like healthcare, telecommunications, insurance, and finance have been made accessible to foreign investors. The stance China is taking is strikingly humble. It's almost as if it's begging for foreign investment to come in. Following this reasoning, if Trump were to initiate a second trade war, China wouldn't respond aggressively or engage in a fierce battle with the US. When China's economy was thriving in 2018, China didn't escalate to an all-out trade war with the US, so it's hard to imagine China doing so now. With its economy struggling, in fact, China is hoping for more American investment at this point, so there is no way they'll risk a direct confrontation with the US now. Let's compare how Xi sent his congratulatory message when Trump was elected this time. He highlighted that the cooperation between China and the US benefits both, while conflict harms both. But back in 2016, when Trump was first elected, Xi's message was quite different. He took a more assertive stance, stating that China and the US would work together to maintain world peace and lead the world. It was a message of equality, positioning China as a global leader, not just an outsider, and giving the world a sense of direction. But this time, when Trump was elected, Xi's usual confidence tone of leading the world has faded. He didn't mention anything about China taking the lead globally, which shows a noticeable lack of confidence. Essentially, he's backing down. So when the trade war starts, it's likely that Xi will be the receiving end, and he won't be able to use the same tricks as before. Trump is no longer a political newcomer. He won't be easily swayed or fooled by China this time. Therefore, my assessment is as follows. First, China will likely deliberately devalue the yuan and absorb most of the tariff costs in an attempt to show weakness to Trump. Otherwise, even a 60% tariff might become unsustainable. Given that Trump has a bit of a vindictive streak and his adversaries aren't just the Democratic Party but also the Communist Party, it's possible that without the pandemic, he might not have lost the 2020 election. Therefore, China will need to let Trump get his frustration out of his system. Second, Chinese companies will likely take the initiative to invest in the US and establish factories there, supporting Trump's efforts to bring manufacturing back to America. Third, China will distance itself from Russia and Iran, stopping its financial aid to both countries. It will work with Trump to mediate the Russia-Ukraine conflict and act as an intermediary with Iran, urging the country to avoid causing trouble over the next 4 years. Fourth, China will likely refrain from causing trouble in the South China Sea and will not entertain any ideas of invading Taiwan. It's quite possible that Xi will privately reassure Trump that for the next 4 years, China will avoid adding any external burdens on the US, allowing Trump to focus solely on domestic economic issues. Naturally, this assurance will not be made public as it wouldn't fit with Xi's image, but it would signal a clear intention to improve relations with the US. If China takes the first step toward reconciliation, the US will probably hold off on imposing further sanctions. In reality, aside from mending relations with the US, which Xi can relatively easily manage, I think most other reforms will be challenging for him to execute. For instance, Liu Shijin has suggested improving the welfare of migrant workers, but increasing social welfare across the board will likely come with high costs, something Xi is unwilling to pursue. At the very least, he should work on raising the living standards of the lower-income population. This is a very valid point, as migrant workers are at the bottom of Chinese society. They experience the most oppression and exploitation, and they are also the main group affected by deteriorating public security and frequent violent retaliation incidents, largely due to their low living standards. Therefore, if they were given some benefits, they would genuinely be grateful. For instance, raising their pension from just over 100 yuan a month to 1,000 yuan would have a significant impact. If you gave city residents an extra few hundred yuan, they might not notice much, but for someone earning only 100 yuan a month, a few hundred yuan more would be deeply appreciated. Instead of spending so much on social stability measures, it would be more effective to redirect some of those funds to improve the welfare of these people. A small investment could yield big results. So I'll be watching to see if next year the Communist Party takes significant steps to improve the welfare of the lower classes. This could include raising migrant workers' pensions, giving them access to affordable housing, lifting restrictions on their children's education and household registration, and offering them equal treatment as urban citizens. If these changes happen, it would suggest that further reforms could be expected. The third signal of reform, in my opinion, would be removing the real estate sector's hold on China's economy. For instance, if the central government were to issue a policy allowing real estate companies to sell properties at a loss to pay off their debts and remove price controls on the housing market, property prices would likely crash. Some companies and even banks could go bankrupt. However, as the saying goes, no pain, no gain. This approach would mean the government no longer has to spend every year propping up the real estate sector. The longer they delay confronting the housing bubble, the wider the fallout will be. At this stage, the government would need to address the fiscal balance once it moves away from relying on land sales. This would inevitably require supporting private enterprises and shifting the fiscal system back to being tax revenue dependent. If the central government doesn't take initiative to burst the real estate bubble, local governments won't be compelled to prioritize taxes and foster the growth of private business. It's truly a no pain, no gain strategy, and it depends on whether Beijing has the resolve to take that bold step. The difficulty of these three reform signals increases in stage. If we take a slightly optimistic view, the most likely scenario is that Xi Jinping will take the first step in mending ties with Trump, allowing him to resolve the grievance from the 2018 trade war and the pandemic, while recalibrating China's positions to avoid further challenging America's global dominance. In this case, it's possible that the US would cap its restrictions on China at a 60% tariff and would not push its allies to join in a unified opposition to China. Ultimately, this hinges on the US economy's ability to recover. If inflation stabilizes, employment rises, and the public feels optimistic about the economy, the US may lose interest in relentlessly opposing China. However, if inflation remains stubbornly high, wages fail to increase, and the domestic economy falters during Trump's term, then China may become a convenient scapegoat for domestic political frustrations, making life much harder for China. Of course, this is the optimistic scenario I believe is most likely to occur. It's the best possible trade war outcome for both China and the US. But it's also possible that Xi Jinping might still try to play both sides, making concessions to the US on the surface while continuing to secretly stir global tensions and undermine US allies. For instance, China could expand its influence in South America, creating threats near US borders, or continue to send fentanyls into the US. If Trump, known for his unconventional approach, catches wind of this, he may retaliate fiercely, putting an end to US-China relations once and for all. If Xi Jinping adopts a more subdued approach for the next 4 years, maintains stable relations with the US, increases domestic welfare, and implements another round of tax reforms to address local government challenges, he could gradually stabilize the situation, reduce debt, and eventually see a turnaround. Japan's recovery offers a relevant example of this kind of path. Will Xi Jinping go down that road? I don't know. Who can tell? Thank you so much for watching. If you found this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.